You wonder what the effects of a global swine flu pandemic can be. Well, not only can it have an effect on human health, as we have seen already with the unfortunate loss of life in Mexico, it can also have significant economic effects, not only due to the human effect, but also through fear. In 2008, the World Bank predicted that a major pandemic could knock $3 trillion out of the global economy, or 5% of GDP. In 2003, SARS knocked $40 billion out of the Asia-Pacific region through disrupted travel and trade. The globe is in a fragile state at present and so has reacted nervously to the news of the swine flu. Let's hope it does not have too much effect economically, but more importantly, not too much effect on human life across the world. In global markets, the swine flu fears and continued focus on bank stress test results are making investors nervous. This reinforced the renewed risk aversion we saw last week. Reports of a low-flying 747 over Manhattan tailed by a fighter jet didn't help an already nervous market this afternoon, though fears were dispelled after a TV channel said it was a military drill. There is likely to be little in the way of big moves with the fear of the flu hanging over markets. While investors are risk-averse, the New Zealand dollar was holding on to its gains yesterday, still in the mid-56 cents to the US dollar. We are unlikely to see any major moves until after the Reserve Bank announcement on Thursday. Three words distinguish this year's lamb market to previous years: lack of supply. This seems to be the main theme for both local and international markets. Market anecdotes suggest that with lamb numbers running out for the rest of the season, meat companies are now just trying to fulfill their main orders in order to hold on to established relationships. With less product changing hands, there is also less opportunity for prices to change much, and this is what we are seeing. Last week we heard Keith Cooper talk on the Newsmaker program about keeping our meat product on the shelf in our export markets. With lamb running out, this is a challenge. However, if we are able to achieve this, given the lower supply, the medium-term prospects remain positive, although prices may edge off from where they have been this year.